there, guys, and welcome to this week's episode of Midweek with Indiacharts. I'm Muskan Kapoor, and I'm joined here with Jay Vora. We're going to discuss how the market was placed. We're also going to talk about Nifty hitting the all-time high today. So let's just get started with today's video. So before starting and going to the Nifty index, let's talk about if there was any data points released in the past week. Have we missed on something? Because I've also seen the S&P 500 has seen some correction. Is the bullish trend reversing for them?
Okay, so coming to the important data, so there hasn't been much, important data which has come out in the past 1 week. But yesterday's data, particularly, I felt was a little important because yesterday the housing data was released. So new home sales that has gone up. Then the prices of the houses inching higher. So that has come about with the consensus only. But month on month, the price change was slightly higher, but that is telling you that the underlying economy is now stabilizing and kind of picking up as well, because uh, there was a lot, there were so many rate hikes in the past 1 year, so that had led to some sort of slowdown. But now things seems to be stabilizing and they are picking up. Now this in a way is good because that is telling you the economy is strong, but this can be a headache for Fed. And maybe they were pointing out towards two more rate hikes eventually, in this year. That can also possibly happen, if the data continues to remain strong. But yes, in the coming weeks, you cannot judge based on the housing data alone, but we might be getting few more data points in the coming week. So core PCE will be, core PCE will be out this week. Then eventually we'll get CPI data and all. So based on that, we'll get fair idea how the economy is doing and what the Fed action will be. But yes, this was one important data point which I thought was worth highlighting. And the other one was, I think, the consumer confidence index. So that also was, that had beat the expectation, and that had come higher. That means that the consumers are actually a lot more confident than they were prior. Okay, so that is also telling you that the confidence level among the consumer is picking up, and that is again indicating towards a strong underlying trend within the economy. So those were couple of data points that was worth talking about. But when we look at the S&P 500 index, so yes, there had been a little correction over here. So but that was partly, I think we had discussed as well, that a 5-wave rise is getting complete and then there is going to be a pullback. So that has come about, and we have seen a 3-wave decline. And in yesterday's trading session, it actually gave a positive daily close, and it nearly pulled back to the 20-day average. So now the expectation would be that it again starts inching higher, because the broader wave count is that this is wave 1, wave 2, wave 3, wave 4, and eventually wave 5 should play out. Now, the interesting fact is that when we look at the CFTC data, there has been a massive short covering that has played out. But when we look at the historical context, okay, which you see over here, basically in 2015, 2019, 20. So in that context, it is still very high. Okay, so that means that more short needs to be covered, and eventually it can even get into positive territory. So if we look at all those things, then this short covering rally which has started may not end soon, and there are furthermore legs to go for this rally.
Correct. Got it. Talking about this, I wanted an update on gold and silver as well, because it had been correcting. Is the correction over?
Okay.
While you also state that if you could give us an update on the dollar index.
Right. So when we look at the chart of gold, so yes, it has been declining in the in the past few days. And when we look at a simple technical setup, then the average is, gold is not able to sustain above the average, and that is where it is seeing some correction. But interestingly, when we look at the weekly chart, it is now actually coming to a very crucial point. So earlier, to be frank, I did not anticipate that the correction would go so deep. So I thought that maybe around the 20 week it sees a correction and then picks up. But wave two corrections usually are deep because in the overall context, this is wave one, this is wave two. Now within wave three, this is one and two. Okay. So we are sort of seeing that deep retracement in wave two. But when we look at the Fibonacci retracement level, it is now coming towards the 61.8% retracement mark. And the worst case scenario could be the 40-week exponential average, which I think is somewhere around 1902. So, we are coming to a very crucial point, and over here, I think there should be some support for gold. And when we look at the silver index, I mean the chart of silver, that is actually outperforming because it had retraced a little more than 61.8%, I guess. Yeah. So you can see some spike over here. So it had retraced a slightly more than 61.8%, but then after it has seen a good pullback. So a positive weekly close will be a good indication that probably this correction which we are seeing is getting over. And one interesting fact is that when the silver started rallying from this low, okay, this is actually the weekly chart. Let me show you the daily chart. So when it formed a doji over here at the bottom, and when there was 1 or 2 days rise, so over here the sentiment had gotten to an oversold zone, which means the DSI reading, which is the daily sentiment index, which we publish even on our website as well. That was indicating that only 10 of 12 10 or 12 percentage of the people are actually bullish on silver, rest all are bearish. So that works as a contra indicator as well. So over here, around the 61.8% retracement mark, there was this extreme reading and we have seen a good bounce. But now we would like to see a positive weekly close, probably to say that this can be a near-term, bottom that can happen. But then again, it is a process wherein, it again needs to go above the daily, the daily 20-day average, and it has to close above the 40-day average. That's when you can say with some degree of confidence that the trend is reversing. But until then, there is a risk of a downside in the near term, but probably the weekly positive close will help us confirm that. Now, when we look at the dollar index is actually very interesting right now because when we look at the chart, it has for now resisted around the daily averages. Okay, so if it doesn't close above the daily averages, then there is a good chance that eventually, the dollar index goes down. But as we have been highlighting earlier as well, a major leg of correction will happen once this support zone is broken down, decisively. Until then, there is a possibility that it can chop around and it can turn sideways. But on the downside, I think around 100.70 or 100.80, around that zone, that is a major support level for dollar index. And once that is broken, I feel that dollar index can go on the downside. But yes, also when we actually look at the RMI indicator, many of the people might be familiar with this, that the RMI indicator in a pullback usually does a pullback cycle, and it has done over here. And now when it gives a negative crossover, that will be an initial indication that there is a risk of the support level getting breached on the downside. Okay. But in terms of price action, break below 100.70 will be kind of the final confirmation point, which will tell us that the dollar index will head lower. But in overall context, I think that this was wave one decline. There has been a pullback in wave two, and we have already started a decline in wave three. Okay. So it is, I think, a matter of time where, eventually the low of 100.70 gets broken on the downside. and this again can be positive for equities as well as for gold and silver as well.
Got it. Makes sense. I'll drum roll to the next question. So the Nifty index hit the all-time high and has touched the 19,000 mark. But on the other side, are there any sentiment indicators that are hinting a short-term or a medium-term correction on this rally? Or is it supposed to continue being as strong as it is right now?
Right. So I think, firstly, this move has actually, I think, surprised everyone because, many might have expected a correction to happen in between and probably a larger one as well. But if you see, the up move has been, it has been gradual. It went up, then it consolidated, it went up, then it consolidated. So in that way, it was a very measured up move. So which is good. But I think many might think कि अभी 19,000 आ गया है, बहुत high level आ गया है. I think we need to sell our portfolios and book profits. So here are few of the things that are actually not pointing out that we are getting into an overbought zone. So one is the FII positioning. Okay, this historically, if you see, whenever it reaches around this 90,000 mark to 1 lakh mark, that is where we kind of get a medium term top. Okay, we are still far away from that. I think yesterday's reading was somewhere around 47,000 contracts, and that too today will be expiry. So a lot of adjustment will happen, and there is also a chance that this can drop to around, say, 20,000 level or anything. I'm just giving a guess, but we need to see today's data. Because usually after the expiry happens, the data changes dramatically. So that needs to be seen. And the other thing is that FI long percentage. Even when I look at the FI long percentage, it is around the 60% mark, and usually around 75% or 85%. That's where it get into that overbought zone. Okay, 85% is actually an extreme overbought zone. So if we see in that context, there is a long way to go. Now there is one more indicator. This was actually one of the important indicators why we had actually turned bullish, because this, when we look in the past, over here actually 2008 data is not there, but we will soon put it. But this reading was way above what the reading was when 2009 bottom had occurred. So in that sense, you can say that when we look at this indicator, it looks like that the up move can continue. That is because you can see over here. See, when the 2020 bottom had occurred, after that, it took a long time for the indicator to come back towards the 0.3, 0.4 mark. Okay, that is where you can say that we are getting near the top. Okay, so in that sense, there is a long way to go, and this, mind you, is a more medium termish kind of indicator. Okay, in this, what will happen is that up move will happen, then there can be correction as well, then the up move can happen, then there can be corrections. So these intermediate corrections can take some time. Okay, so I am counting that everything, and I'm telling you that this indicator is actually indicating that for next few weeks or few months, the trend should ideally be positive, and probably the dips will be bought into. Okay, so these are actually two indicators which I look at it very closely, when I basically to judge whether are we doing a short term top or a medium term top. Okay, so none of these indicators right now are giving us a red signal. So that is a good point. Now when we look at the Nifty index, so now when we look at the Nifty index, see, this is what I was telling you, that it is moving higher, then it is consolidating a bit, taking support at the 20-day average, then moving higher, then consolidating, and then moving higher. Okay, so I think as long as the 20-day average is held, I think the bullish momentum can continue, and we might continue to see some sort of minor degree corrections, but the up move is likely to continue. And the reason why I say this is because even when you look at the up move that had occurred after 2020. You can see over here that there was a pullback to the 20-day average, then there was an up move, then there used to be a consolidation, then an up move, consolidation, up move, and at some point of time you might also get a correction as well, but those all I think will be short lived. That is because in terms of wave count, it is indicating that we are possibly starting a larger wave 3 up move, because just to put into context that this entire rise, we are considering this as one leg of up move. Okay, the entire correction got complete somewhere over here, wherein we mark this as WXY, and this is wave 2 low. Okay, now wave 3 is going to start, and that means that the medium to long term trend according to us is very bullish, and I don't think that this low should be revisited anytime soon in the coming weeks, or probably for years as well. So that is why, in broader context, when we try to understand what is happening, then wave 3 is playing out, which means that there will be periodic pullbacks that can happen from time to time. Okay, maybe to the 20-day average and or the 40-day average, and then again it is likely to pick up. So that is how we are anticipating the up move to unfold. And in that context, there is there is one more thing which I observed, many people are highlighting, is that this negative divergence. Okay, so I want to take a minute about and explain this. See, whenever you are in an uptrend, okay, you are bound to get this negative divergence. The real effect of the negative divergence will come into play when the 20-day average is broken. Okay, because that is where you can say that the short term major support level is breaking down, and that's where there is a risk of a correction either to the 40-day average or deeper than that. And I can show you that whenever the rise is very strong, okay, you can see this negative divergence developing again and again, but it simply tells you that the up move is likely to continue as long as the 20-day average is held. Now you can see over here, earlier this was looking as a negative divergence, then the high was breached, and then somewhere over here it looked like a negative divergence. Then people said this is a negative divergence, and only then it saw a minor degree correction. But over here also, if you see, the reading was very high when Nifty was at this point. It saw a knee-jerk reaction, but again it started inching higher. Okay, so it was only at this point where this divergence worked. Okay, and that too divergence worked because I think the 20-day was broken on a closing basis. So as long as the 20-day average is not broken, okay, you might continue to see the divergence, and I may not be surprised that eventually the RSI goes up over here, it negates all the negative divergence, and then again it starts forming a negative divergence. So that can happen in a bull market, and that is very normal. So one should not be fixated with this view that this is negative divergence, so market is going to correct. I think 20-day average becomes a very important level in such cases, and as long as that doesn't get taken out on a closing basis, the uptrend can continue. Okay, so this was on the Nifty index, and now broadly, if you see, even Bank Nifty index, which was actually lagging a bit, now that has started to pick up. So broadly, if you see, I think the up move is likely to be broad based, and so far we are actually seeing a broad based up move. Now many people might also say कि अरे थोड़े stocks ही चल रहे हैं, but when we look at the heat map, okay, and I see year to date, so you can see Nifty reality, that has gone up by 19%. It is only, I think, IT index which has not performed that great, and Reliance also has been a laggard. So that is one of the reason. And dollar index was rallying, so because of that, the metal index has not done well. But I think media is largely because of, we can say Z media, because that holds a very major part in this. But apart from that, you see many of the index, or in fact a lot of index have given an up move. If you see the Nifty mid cap, if you see the Nifty 500, you can see gains of somewhere around 100% or so. So there are many, this rally, I think, has been broad based and it is likely to continue. So, there will be at times when, some of the sectors do, take a back seat. But you can see over here, like, for example, auto, I think we had mentioned that it has broken out from a very major, from a major top. Now it is, it went up, it consolidated, it is going up again. There will be a consolidation, but it will keep rising higher because the long term trends are now, turning bullish. So that way, I think most of the index, even for that matter, if you see the capital good index, it saw a huge breakout in 2020, I think, over here, in 2021. And since there, since thereafter, it is rising higher, it is seeing a pullback and it is rising higher. Now many are telling that the valuation and all is very high, but I think, when we look technically, it has been a breakout after probably 15 years or so. Okay. And in technicals, we say that once the trend starts, it doesn't falter soon. Okay. So if we are seeing a 15-year breakout, I don't think it is going to end in 1 or 2 years. This could be a multi-year story. So obviously, see, if there is a valuation, thing over here, so there will be periods when the index or the stocks will get into consolidation. But when we look at the broader trend, that is turning bullish. So that way, any major decline in this sector particularly as well, can be a good opportunity to, go, to build your position. Because over here, what is happening is that 15 years sort of breakout is happening. Now, I had mentioned earlier as well that BSC, PSU index, that is also, I think, on the verge of a very big breakout. PS, finding a symbol in trading view is a task. Yeah, public sector. So over here, I'm just removing the Bollinger Bands. And if I see the monthly chart, so something of this sort is also visible on the BSC PSU index. And you can see over here, if I draw a horizontal line. So, this is the all-time high, and this was an intermediate peak which it had formed. So it is right now, coming to that level. But I think once the all-time high of, say, somewhere around 884, no, sorry, it is of 11,200, okay, which is 6% away from the current levels. Now, if that happens, then there can be a big run even in the PSU sector as well. So that, this sector actually is one of our dark horse, and, it can perform very well. And apart from that, we have discussed it time and again, even the pharma, the healthcare space, that has taken support at the 40-week. Now there is a bullish crossover on the monthly chart as well. So, this can be an outperformer as well, or at least, it is expected to do well. Now, because this is pharma, it tends to be defensive. So sometimes when the Nifty is rising higher, this may not rise higher. But when the Nifty is correcting, this may suddenly start outperforming. So that is the characteristics of, this healthcare index. But broadly, what I'm trying to say is that each sector, they will go through a phase of correction or consolidation. But broadly, if you pick and choose any sector, they are doing pretty well. And I think this rally will continue in most of the sectors and index. The only important point, I think, which people need to watch out for is that, check the daily or the weekly averages. Okay, some or the other index will be following, this averages on some of the time frames. So for example, say if I look at the healthcare index, I can see that over here the 20 and the 40 is being respected very nicely. So as long as this index is above the 40-day average, this is, the bullish momentum is likely to continue, and each pullback will only end up attracting buyers. So find for such setups where broadly the I mean, the stocks or the indexes are holding the moving averages, that is where we will get a good performance in the days to come.
Makes sense for people who are also watching and want to experience the sentiment indicators that Jay showed, or the diffusion indicators, or even the Rohit momentum indicator. Can use the strike tool as well to analyze whatever we discuss as well. You can go to web.strike.money and experience the limited period offer of the time that we have given for everybody to explore. So yes, that's also something everybody can do. And we are here coming every single week to talk about how the market is going on as well. So thank you, Jeff, for your insights.
Thank you.